Hey everybody, welcome back to Think Scripting and Trading Think Script specifically. My name is Mike Fairborn. It's great to have you all here today, folks. Today, it's really option oriented and really trying to look at customizing some of the more basic elements of options that we can do fairly quickly and make them simple. Many of these scans and this option input into Thinkorswim to kind of get us, and build something that is custom that we can utilize within options themselves. And so, looking forward to going through that with you. Hello to each of you. I do recognize many of you. It's great to see you all back. Rocky, Mark, David, Rojo, Chris. We've got Mighty, not Mighty, Mighty Mouse. We've got Mighty Quinn, a different Mighty. Welcome, Mighty Quinn, as well as Sharon. Hello to you. Life in the Fast Lane. We've got Will there. How's it going, Will? As well as JP and others joining us, Jenny, XS, as well, and some others. But folks, any questions, comments you have, throw those in the chat box so we can help address those for you. I do have a good friend, colleague of mine here with us today, an individual who's very knowledgeable within options and in the markets in general. Teaches a lot of great classes each morning within our Trader Talks class, and that's Kevin Horner. You see him in the chat as KH, and you can follow him on X. Encourage you to do so. Kevin Horner CS. You can follow me on X as well, and that would be Mike Fairborn CS, my name. All right. So with that, everybody, let's turn it over to some quick disclosures so we can dive right into today's content. Okay. Equity and index options, they do carry a high level of risk. They're not suitable for all investors. And that is really our topic today is options. Information here is for general information purposes only, should not be considered an individualized recommendation or personalized investment advice. The paper money software application is provided for educational purposes only as well. Backtesting results, we do look at prior results too, and we will be doing that with some of our scripts as well today. But those are hypothetical, they're not guaranteed. There's no guarantee that the same strategy implemented today would produce similar results. Now, past performance of any security strategy does not guarantee future results or success, and investing involves risk, including for some products more than your initial investment. A good look at our futures disclosures there. We just look at the charts, folks. We do not dive into futures specifically, and it does state futures and futures options trading does involve substantial risk, not suitable for all investors. But it is good to have you here. I know we have this class is a promoted type class where we kind of open it up and let people know about this class. So there are going to be some new folks here today. Welcome to all of you. Welcome to our vets that coming back each and every week. But within this class, what we do is we do design. And a lot of times we implement existing kind of script based information within the platform that we utilize today. It's going to be options specifically. I'll pull this up here. In fact, when we are scripting, we'll oftentimes identify a goal. Can ThinkScript meet that goal? We outline the scripts, we apply the ThinkScript, and a lot of times we are using existing indicators on the platform to build columns, to build custom columns, to build custom scans so that we can look at these and try to find different sorts of scenarios where options or the stocks themselves might have changes in a number of different features that we're looking for within options. So we're going to be tapping into that. But let's start off first just by looking at the general market, just very, very briefly here to kind of highlight where we're at and what we've been seeing actually with the VIX. Obviously plays a key role on implied volatility, for example. We want to dive into that clearly today for options and particularly maybe option sellers as well. Those trying to sell options that are looking for potentially higher premiums. So as we look over here, though, we can see that the markets themselves, they are spiking back up. We did dip down below a certain point, but we're seeing some strength really for the first time in at least 4 down days, or at least 4 red candles coming on down in the S&P 500 index. But interesting to see is I always like to look at these after we have been going down for a little bit. Can we take out the prior levels, the prior support levels here? Currently, we're above there. We still have about an hour left in the trading day. So that's something, definitely to consider here as we look at this. But, look at the NDX as well. A lot of companies have their implied volatility has shot up a lot, and there could be some opportunities in this regard. Say, for example, if this trend ultimately, we don't know, when, we're still looking for maybe a little bit of confirmation here, maybe of a bounce. If the trend can continue on this substantial, kind of move to the upside here, can we resume this higher? Well, it could be an interesting time for traders in general to, or even, you could say individual investors to maybe look at selling, even like, say, for example, puts to put a position on, looking for a position, or just some traders just looking to try to gather premium from the market. Because if we were to go, let's say, sideways a little bit, up, or even down to a degree, yeah, if we are selling puts down here, those put premiums have gone up a little bit. We know that because of the VIX. So it actually is a really interesting time to look for think scripts that relate specifically to, building sort of custom option sort of scans as well. And that's what we're going to dive into today. But quick note, just to kind of set the background here for us. There you go. There's the VIX right now. And that is a pretty substantial spike on that VIX. In fact, where are we up on that VIX? Well, off of these lows, I mean, into the middle high range here, that's a 50% increase, right from there, just over a few days, actually, right from where we're at. Now, we pulled up back a little bit, but you can clearly see over here, that was a pretty big spike. And I mean, even right now, we're still up a little bit, about close to 30% off of these lows to the current level on the VIX into this range. And that can make a huge difference in terms of options themselves. Okay, so now let's dive into it. Now, I did note there was this request that I had a couple of requests off of this X post that I'd sent out where we were actually looking at, in this particular one, we were actually looking at dividend aristocrats currently trading at historical high yields and using a yield script. In fact, I'll just maximize this, just kind of highlight this here for you. But as you see over here, we're going to actually tap into a little bit of this concept today using another tool like implied volatility for options and seeing if prices are actually moving above a particular range, signifying that, yeah, there could just be more premium in these options that are starting to sort of ramp up a little bit, and they could be attractive to traders or investors. But this specifically was on dividends. Now, a quick note, since I did bring up dividends, dividends, they can be cut at any time. We're not here to talk about dividends, but I wanted to highlight this. It is one of the posts that we did have recently. There we go. I'll put this, oh, now it's playing. Click it too many times, it'll start to play. There we go. So I was just trying to get into that. If you want to take a look at this or others, you can find that right there. But let's start off just sharing this because I mentioned I would in terms of a think script. So I'm going to go over here into it right now and just highlight historical yields right there. Historical earnings yield, not historical earning yield, but historical yield itself. And I've got a new one in here. I think that was the one I did utilize, the new one. I'll know real quick if I pull it up. Yeah, obviously there's not one on the VIX, but if I said something like, let's see, what do we have here? ADM pays a dividend. You can see it's gone up a lot. That yield's gone down. We're looking for yields that are a little bit higher after prices have dipped. But this is basically the same one here. I'll share this into the chat so you have it. It's a cool way to track over whatever time frame you're looking for what those yields are. Okay. And this, think scripts aren't guaranteed for timeliness or accuracy, but it's a cool way to track it. I mentioned I would just share it. So, and by the way, all of these that I'll be putting in here, they will be listed for those viewing this on the recording down below the more section of the description. I'll have all these links here. Historical yield. Okay. Okay, so that's there, but it's really interesting because we can use the same concept in terms of implied volatility too, in terms of looking at changes and how things have been over a given time frame in terms of are we in the high range of volatility or low range? So we'll dive into that. But before I do that, I want to talk about this over here. Um, one of the things too is we just look at options, just generally speaking. When options have, a lot of times people are looking for liquidity to the options, of course, because they're looking for the good spreads. So when you buy it, there might be an easier chance of selling it or whatever the case is. Now, Microsoft stock obviously breaking into lows here, but one thing that Microsoft might have, just even though it's a high price stock, is it might have a lot of volume on the stock itself. And matter of fact, there is quite a bit already, close to 30 million shares. It looks like we'll probably exceed that before the market closes. So, I mean, if you think about that, 30 million shares, that can create a lot of, I mean, you can see a lot of traders, and if you're trading the stock, many of them might be using options with their trades, but there's a lot of action going on here, a lot of buying and selling, and that can certainly influence, let's say, some of the spreads. If I come over here and just look at the spreads over here, even on our July, I'll go to the July monthly contract, and it's an expensive stock. It's above 300, but even above 300, you can see over here, well, these spreads are okay. It's kind of it is quite expensive, and maybe there are better spreads at other levels, and that can help. But by the way, I'm going to talk about open interest as well, but I didn't think I would see that kind of those spreads over here as wide on Microsoft, but they are fairly wide, comparatively speaking. Look over here at Nvidia. Now it's a $200 stock, but the spread's substantially lower, tighter, I should say. Look over here with me. That is a 5 cent spread. Amazing. Let's keep going. 4 cent spread. Now, how does that happen? 4 cents? That's right. You can get a 4 cent spread in there too. 5 cent spread on a $200 stock. The one thing I have to say that NVIDIA had that Microsoft itself did not have was the next factor to look at for liquidity on the options themselves, right? And consider this. So as we go through each of these can be considered to be scan filters for the stock and the option itself. Now, we're not in the hundreds over here. We're not in the thousands. We're in the tens of thousands. That is how it's done. There's just a lot of action, a lot of buying and selling. And, with all that activity, there's just more interest here. The supply and demand, going back and forth, you're just getting a much more liquid instrument here. And that is quite liquid. So as you look at something like this, even on the chart here, yeah, I mean, we're all the way down to a big round number around 200. Some traders might say, well, you came down to this level, you kind of paused here before here. Will it bounce? Well, that's the big question. We've been thinking there could be a bounce in some of these tech stocks for a little bit, but it was a big run. But if it comes down here and maybe you're looking for, maybe a hold, the close above the high, the low day, whatever the case is. We've got a lot of think scripts on that as well for price action, but does it work in terms of options? How do those options look, as we go through this? Well, we just looked at them. The options look pretty good. These can be filters to consider. Now, NVIDIA itself, we're going to find that in a list over here of, let's just say, would it be in the S&P 500 for sure, but it would also be in the basket of tech stocks here, like the NASDAQ 100. Notice I'm just right over here in the NASDAQ 100 is where I'm at. Did you know there's a really interesting additional filter that we can apply to this to scan within the scan itself that's built into Thinkorswim that could take into account volume, etc. You can still do that, but come down here and look at the category. Okay, categories, anything here? Not really so much. I mean, there's all optionable is maybe a key one. No, the thing I have to tell you is you're going to get basically all optionable within the NASDAQ 100. I don't think there's a stock in the NASDAQ 100 that's not all optionable. But if you were scanning in, let's say, for example, all stocks, you wanted to widen that basket out, or just the NASDAQ 100, the NYSE, New York Stock Exchange, you could look at that too. Now it would make more sense to say, give me all optionable, then give me volume on the stock, and then maybe some open interest as well. Now, open interest is kind of like, it's like on a line by line basis per whatever option we're looking at, though, correct? So that changes a little bit with what we're after here, but I'm just going to say, I mean, you could do something like that too. What I really wanted to show you is this here. I'm going to go right back to the NASDAQ, right here. There we are. And intersect that with penny wide options. You notice on that NVIDIA, there was one that was in there that was a 4 cent spread. How did that happen? Well, it happened because over here, penny increment options, or I said penny wide, penny increment. In other words, you can raise the option values not by 5 cents. Some of them in there are 10 cents, but you can raise them by a penny and try to find. And many of these companies are, penny increment options. There are not all of them here. I don't know. No, only half About half of them in the NASDAQ 100 are penny wide, but you're going to find in here, let me just show you. How many do I have coming up? Oh, we have enough. There's your NVIDIA right there. Now, this is another indication. These companies here, it's just another indication of potential liquidity. Because if I've got a spread over here, and let's just say it's two, I'll just say 220, on the bid to 230. I can come in here and I can say, if I'm looking to sell a put, let's just say, for example, minus a put, I could actually come in and do something, obviously, let's just say I did 226, just above the midpoint by 1 penny. It's amazing how often on these liquid companies that have so many traders out there willing to take sides, they're just trading. Some of them are just trading the options, whereas you might be looking to gather premium, but you might also be willing to trade them too. It's just very comforting to know that not only do you have a tight spread, but if you were looking to get out quite quickly, you might not be taking a bigger loss due to the wider spread. Because when you try to close out, perhaps there's a much higher likelihood that you're going to be able to use that penny increment spread to get out, maybe to get in at a better price, to get out at a better price, because there's more liquidity on the stock, there's more liquidity on those options because of open interest. And then finally, the third layer is you've got the penny wide. But it is kind of surprising, isn't it? We're getting about 50% of these in the NDX, approximately 50%, in the NDX, the NASDAQ 100, that allow you to do this. I would say, though, that many of these names are going to be recognizable. I mean, you got Costco, CSX, Cisco, CrowdStrike. Yeah, I mean, Comcast at the top, Google, um, gosh, Meta, basically the Mag 7, you're going to see a lot of these in here, and others you recognize, Qualcomm, T-Mobile, Tesla, so on down the line. But that can be also really quite helpful. So I'm just throwing this out here so that you can kind of, be more knowledgeable of that and helpful, so it can help you find those selections first. Now, the first thing though I wanted to do, or in addition to this, let's just say those other tools that we talked about. For example, there is under the study, you just come over here. I think many of you already know this, but just to highlight it, it's going to be under volume. Yeah, just like average volume. And maybe on these companies, 50-day average moving volume. We're not going to look at a million shares. We're going to look at something like, I'll put another zero in there, 10 million shares on average traded. Now, that could also help to influence what we're seeing here as well, right? That's part of those filters. Scan it, 25. We just cut it in half again. So we went from 100 in the NASDAQ 100 to around 50, 50, 52, and then we cut that in half to 25. Now look at this list. I think many of you recognize these names. So all else equal, this can help us. But I don't want to miss, kind of the elephant in the room, and that is this. We don't just sell options because it has good liquidity, right? It has to make sense to us in terms of what we think we're going to get. Let's just say we're sticking with kind of the selling theme, selling puts, because implied volatilities has jumped. It's kind of more current to the market. But the thing is as we look at this, um, you know, utilizing this in terms of what we're after, finding these companies, setting them up, but what do the charts look like? Am I okay with the company? I just use this one as an example because I thought it was an interesting one. They had beat earnings and I think the guidance was higher too, but prices went down after the move. So maybe there's some level of, I don't want to say, you have to maybe say all else equal again, better valuation. Some traders might see when prices have dipped down to maybe a big number, they might consider something like an NVIDIA, right? But they're looking at it basically with the technicals, maybe the fundamentals in mind. I just threw out a couple in there. And by the way, it's interesting, they did jump the dividend up quite a bit. It was only a penny, but now it's a quarter. That's a huge percentage increase. But anyways, whatever you're looking at, don't just pick it up because, it's got these parameters here. That's kind of the starting point for the watch list. And then we go to patterns and all the other scripts and things like that. So with that in mind, let's continue on here. By the way, guys, if you're finding any value from this presentation, we're going to dive right into kind of the core topic today in terms of the script right now, building on that historical yield a little bit. But smash that like button if you're getting value out of this. Be sure to follow us also, Kevin and I, on the Trader Talks channel. Let me just quickly throw that out here. If you're not already, I wanted to bring this up because I know many of you are new to our channel. So I'll pull it up. Thought I had it up and I didn't. So let's just do this. I'll pull it up right now and I'll just join it in here. And no, that's not it. What just happened? All right, let's go back to that again. My channel. There it is. Not my channel, our channel here. And then pull it up right here. So this is the Trader Talks. I'll put this in the chat as well so you guys can take a look at it and we'll go from here. Now, oh, cool. There's a question coming in. By the way, if you subscribe to our channel, you get all the playlists that we've set up for each and every class. Some great ones here from Kevin. So be sure to check those out. If you want to see what we've got in this class and our the playlist, I should say the playlist for this class. Here's one we did last week. See, I'll just give you the whole playlist, but this was our buyers beating sellers with this. We just looked at volume waves in this particular one. So this is the ThinkScript. One second, folks. ThinkScript playlist. Okay, then we'll move forward. Because there's a lot of different scripts in there that you might find useful as well. Okay, now Mark said, I don't have the average volume in my dropdown. Really? It should be. So I'm in the demo account, Mark, and this should go a long ways in sort of mirroring the paper money account. So just do this. You could always use perhaps your live, just to look at that if you wanted to. But yeah, I think the paper money does have it. I thought they did. But you come over here. If not, though, it should just be in the regular account. If you go into, yeah, you should be there. So add filter study, drop down at the bottom. So you're not seeing that mark right there, huh? Average volume right there is a built-in study. Okay. Well, I'm going to do this. Here is I just clicked on just the average volume. I'm just going to, well, let's see. I don't think I can share that whole thing. Won't let me. Weird. Okay. See if I click on it. No, I don't have anything to share specifically. Huh. Interesting. Double check that, Mark. Let's just see what you get on that. All righty. While Mark's doing that, look, folks, let's do this. I'm going to come over here and I'm going to, just as an example, we just took a look at that historical yield and what that shows. Now, if we were to come on and look at any stock in here, one key element that can influence the pricing is it's a huge component of the underlying itself, and that's going to be the implied volatility. Okay, the implied is just so IMP is what it is. They shorten it, abbreviate it IMP, and then volatility. To add this in, I'll click on it, and let's just get a little bit of width to it so we can see it, or maybe a little better. Okay, it'll show off on the bottom here. Okay, so this plays a key role in influencing the pricing of the option itself, right? Because it does so because a 1% increase in the implied volatility, which, by the way, can be heavily influenced by the market's volatility, right? The VIX shooting up can influence the value of options by a 1% increase can influence it by the Vega Greek over here. And let's just move into one, and I'm looking at what? Okay, that's great. So July is fine. Coming over here and looking at this. So if we look over here, I mean, these option Greeks do play a role in, determining the price of the option. And basically, I'm referring to the price range over here of these options, right? Oh, right over here. So the price range of the options are influenced by the option Greeks. Now, a 1% increase in the implied volatility that you see right there at right around 45 for this monthly contract, 1% increase will influence the option higher by the amount of the Vega. So if we look over here at the Vega, and let's just say we're looking at the 180, so it's quite a ways below the 200 right now, where we're roughly trading close to, right? The option range will go up 15 cents for every 1% increase. Now, we will also conversely go down for every 1% decrease by the amount of the Vega too. Okay. So a lot of times if the implied volatility is higher and it begins to drop, and let's say it was right over here that we had sold those puts at, just to highlight this script before we get going on it, then all else equal, that could be a huge positive for this trade, because that could substantially, I mean, if this were to drop, let's say, for example, 10%, what is that right here? That's a $1.50 alone. Doesn't include time decay or the delta change or whatever it is. That could be a minus 150. Now, what is that option over here? If you knock off $1.50 off of that, think about the premium involved on that, just in terms of an unrealized basis. You haven't closed the trade yet, but we're talking, for standard equity options contracts, that's $150 per contract. And that is just the Vega alone. Just the Vega alone, if it were to drop. So it stands to reason that it could be very interesting to note when the implied volatility has broken above, let's just say, whatever range we want to look at. I'll just say a 50% range between the high and the low over the year, and we're rising. It's above 50% and we are rising. Could be opportunities there, all else equal, to sell. We saw something like this just happen on NVIDIA, I believe, but we'll see. Let's take a look at it. We'll compare the chart as it relates and potentially do an example trade on this one for us here. But that is interesting. Now, a quick note, because I did bring up the delta. The delta, the delta will change the option range here. It influences it by a $1 increase in the underlying stock. So if the stock goes up $1, the delta will influence the bid and ask range by what? The delta amount. Notice this has a minus sign over here. So if we go up, if our underlying goes up, we know that the put side will drop. Puts are right inversely correlated to like calls and the price of the stock going higher. So that could also be a positive. Sometimes you'll see that implied volatility dip when prices go up as well. So that would be a double kind of a whammy on that. Not to mention theta, which is time decay. And this time decay on this option is about 9 cents or $9 a day per contract as it stands. And that's, by the way, 7 days a week. Whew, look at that open interest, though, in the tens of thousands. Interesting. Okay, that was right at 180. And that also is about let's see, 185. That's more like a 20% expectation to a 15% expectation. The price of the stock will go down there by that range, too. So throwing in some option lingo, because we're looking to build a scan around that and kind of tap into that more. So we're building on volume on the stock. We're building on the open interest and the spread. And now we're taking a look at maybe Vega as an insight to what's maybe pushed up some of those values. And do they actually show when we're looking at the chart? So first thing I want to do is run through a really super basic scan with you. I want you guys to build this as we're going through it. I'm in the scan tab right now. And I'm going to clear this out, and I'm going to clear this out too. And what I'm going to do is I'm just going to look at we can start off with the NASDAQ 100, no problem. So I'm scanning in the NASDAQ 100. And by the way, I'm not in the options hacker. I am in the stock hacker right now. That's where I'm at. And we can use that stock hacker. It's a little bit more versatile, but it does work just fine. So let me just show it to you. So stock hacker, scan stock hacker, come over here to the right-hand side of the screen. Add filter. We're going to click on add filter here. We're going to use the study filter. So let's click on that. And we're going to click on the pencil just to the right of the periodicity here. Okay, now with that, we're going to come up over here. The first thing we want to do is delete the ADX crossover. It just came up as the top of the list, and that's why. So we delete it. We're going to build one ourselves here just to look for stocks that maybe have implied volatility just by itself greater than 50%. Greater than 50. So add condition. We'll go in here. We're just going to select study. This is going to be our first level. This is just on the chart alone. Implied vol. Now, in this case, we could say crosses above or greater than, whatever the case. We can look at that, but I wanted to highlight this over here for you and just show you something interesting. If I just said it's currently greater than a value, and remember, implied volatility are in decimals, so you have to go zero point 0.5. So it's greater than that right now. So first things first, let's just try to get an option that is kind of expensive because we can sell that all else equal and capture that premium. Click on save. That's so easy to do, right? And it lets you know that is how, I mean, that's the code you can put in. IMP volatility, open close parentheses, is greater than 0.5. Click OK, scan it. You have 39 companies that meet that criteria, okay, that are greater than. I actually put up the implied volatility column. You could actually use just the implied volatility column if you had a small basket that we've got right here. But this can be versatile across larger ranges of stocks. Let's say in the NASDAQ 100 that are maybe some of the mid cap to smaller companies too, right? But every one of these is going to be above 50 now. And what does that mean? Well, we'll just pick on NVIDIA. NVIDIA is actually not at that level. We're going to break it down a little bit, even to a better classification, because we're going to measure a company's own implied volatility percentile range here in a second. Notice NVIDIA wouldn't make the list here. But some of these, just generally speaking, that could be an interesting one. No NVIDIA. What do we have? SDX, Seagate will be above 50, clearly. Now, when you say that, what we're doing is we're making a comparison here and saying, well, how's the implied volatility here relative to, let's say, the VIX? It's a lot higher. It's substantially higher. I said 50 because I wanted to say we were at least more than double the VIX level of implied volatility. STX, yeah, if we come in here, look at this. So we know how much implied volatility. Wow, they don't have a ton of, this one has in the hundreds. So these spreads are going to be wide. But I could tell you at 88, this Vega has substantially influenced at 0.99. Yeah, it's like substantially influenced, like a dollar, basically a dollar here. So you look over here and you say, my gosh, it's really had a huge impact in raising that spread up, right? But that is a simple, super simple way just to make sure you're getting stocks that do have higher implied volatility. Very simple, right? Okay, and there are other comparisons that, yes, you could look at. That's right. Okay, so yes, there is one too for the, well, this is in, I believe this too, Chris, is in the S&P 500. Those would be, but yes, we specifically look in the NASDAQ. A huge overlap, NASDAQ 100, S&P 500, but that's a good point. Compare it maybe with something specific to the NASDAQ volatility range. Okay, let's do this. Let's dive in a little bit deeper. I'm going to just choose a totally different company, although we might revisit NVIDIA here in just a second. Look at Boeing. Now, Boeing is moving up a little bit here, and the implied volatility on Boeing has come down as of late. Notice it did spike over here, and sometimes at these higher spike levels, as you can see, not every time, but sometimes you can see them maybe spike near a high point or get close to spiking there. It's not 100%. But if we looked at something like this, and I'm going to go actually, we want to review this here. So let's go into the options just to show one built-in tool here. Today's option statistics. Now, it does tell us here, which is really nice. It does give us that implied volatility range. Look at that right there, 52-week IV high and the 52-week IV low. And where is it at right now? It's at 33%. And you can see, so there's the high for Boeing, there's the low, it's at 33. So we have to say, if I'm drawing the high range and the low range, I'm just going to look at like a third. We're basically down in here if this is like the middle, somewhere in here, the middle range. Now, what a lot of option traders will look for, and it's tied into option scans we've done in the past that have been utilized. Let's say, for example, just trying to find, when options are maybe becoming potentially by themselves, all else equal, more valuable to traders when the implied volatility shoots up for selling options when they have begun to cross above that 50. The idea, though, is to kind of get a scan to help us with this. One of the things that I found the very first time it was through Ken, one of our prior coaches that taught this class, and this is what he had built. I'll keep the implied volatility on here. I don't know if you guys have this or not, but this was actually a really cool scan that he did. Uh, IV percentile study right here. This is the one he built and it's actually really cool. I'll pull it up, highlight it here for you. And what it does show is it looks at the stock itself. So we kind of looked at level one, sort of an approach to finding high implied volatility. We did that with the condition wizard pretty easy over here. Over here, we're actually comparing the stock over its time frame. What was the high? What is the low? And where are we at in this trade? Okay. Where is the stock at? Is it breaking above its 50% level? You can see where the high and the low is over our 1 year time frame, which I think is a good time frame to look at, the upper level and the lower level. And if we were to draw a line through here, are we, I'm trying to do straight lines, are we above the 50%? Absolutely not. Are we, and even a step further, what about companies that are crossing above the 50% level or whatever number we want? 75% level. Are the options becoming attractive here? Also in this class, we don't forget what we've learned in terms of price patterns and different indicators. That's right at it closing the gap there. Do we come down to this level and get a bounce with an indication there? We do. We actually get that, and there's a sharp bounce, a close above the high to low day. After you close that gap. There we go. Close that gap here. And even after that bounce, implied volatility still sticks in that upper level. That's quite high. That could be attractive area for potentially selling some puts down here. By the way, if you had a long stock on here and you thought the stock was only going to run up to a certain level, maybe sometimes also individuals are selling calls up top too. Okay. Now, a quick note, short options can be assigned at any time, as we mentioned, but traders are basically stating if I'm selling a put down here, they might be anticipating if I hold above that level. In other words, prices go up as much as they want. If they go sideways, even if they go down to a degree, those folks are three ways that a trader will anticipate making the max gain if they hold it to all the way to the end. If it holds above the short put. So it's an income strategy, and this is a really cool tool. So let's take it to the next level. Let's get the scan out, and the scan will show us, depending upon whatever number we want coming in here. And this is just adding to Ken's. And let me share that right now with you. So you have Ken's here. But this is the got his name in here too. There it is, Ken Rose. Perfect. Okay. What we've done here is just build it into a scan. I've shortened it a little bit, but used the exact same concept. Okay. So let's go over here. Let's click OK. We'll put it into the chat so you guys have it. And this is just IV percentile. And this is for the chart. Okay. There you have it. So you'll have this one now. Great comparison. Anytime you want to take a look, if you're, let's say, selling options, where are we at relative? And what's the trend as well? Fascinating to see that trend. Okay, these two are going to line up pretty well, but it's great to see the context of those highs and lows over those ranges. Now, into the scan tab, let's do it. Let's pull it up right now. So let's see, load the scan, and that is going to be in the IV. I've named it IV. There it is, percentile breakout. And this is it. All right, so if I scan through this, let's run this guy in the S&P 500. 55 companies come up. Let's go ahead and take a look at the scan. And in fact, I'll share it right now just so we have it here and ready to go. But look at this with me. You can see, well, here. I'll share the scan. So this is the actual IV uh pers scan. Okay. All right. So as we look at this, I've changed the inputs. Now I've set this up so we've got look back bars. We can adapt this too a little bit further to use some of the ThinkScript code so that it adapts to the time frame. But really, you know, I think looking back 1 year might make more sense than looking back 3 years or more because conditions change. I mean, what have we just seen with AI? That's why I was hesitant about going too far back. We could still build out exactly what Ken had utilized before. Okay. I've got just a couple of additional just points here, but this is actually really, I just took the core portions of what Ken had and threw them in here. Um, yeah. And so I did put some inputs in here for you though. 3 bar look back. What does that mean? The 3 bar look back simply means this. Once we broke above the percentile level that's measured over the 1 year range, and I said 50, you can change it. You want to go to 75? Do it. Change it there. But I put it look back. You can only have 1 bar if you want it to be current right now, but it happened within 3 bars. 1, 2, 3, go up to whatever number you want, but it lets you know that you crossed above there, above that 50% range. So if I just click OK, we're gonna look at some of these, but look at this with me right here. Okay. Um, it's showing, because NVIDIA does make the list, that we broke up above the 50% level within the last 3 days. Do you see why we might have been able to do that? What is this spotting for us? And what is it not only is it spotting potential pullback, but it's telling us, it's giving us that confirm there that we broke above the 50% of its own range with the potential to maybe even go, higher. That's the spike up right here. Um, and so, the lower end of the range, I mean, if it were to continue to run up, I mean, it could drop, and that right there would be a positive for selling those options. But right there, that is the NVIDIA. So let's just do this. I've talked enough about it. Let's sell a put contract on here as well. We can do a spread if we wanted to as well. Maybe just a short put as an example trade though today over here. There is our 185. That was like a 20 delta. I want to say we're going out to July, by the way. So if we're anticipating this bounce and taking advantage of that spike in implied volatility going higher, at least into the higher range over the last 3 bars over here, it's got the 180 is actually really, it's got a lot of open interest. That's a 15. So between that 185 or the 180, I'm just going to do this one for now. The spreads, that's what a 5 cent wide. It's a long way down. This is even lower than a lot of option traders would look to sell. But if you wanted to kind of pad in a little bit more of a buffer zone between where the stock is trading at and where this option price is, watch this. We're going to take advantage of the penny increments. I'm just going to go like 28, 29, like that, get a better price, even with a tighter spread. We'll click on confirm here. It's like a confirm and send. Now that is the buying power effect. If the company were to go bankrupt, the stock would go to zero. Remember, there's an assignment of shares, very, very likely, incredibly likely, if the price of the stock goes below the strike price by expiration. But some traders might say, I'm okay buying it at 180 as well. There's the credit. I'll send it through right now. Okay. Like I said, some traders might be more bullish. And also, what's to prevent somebody if the stock starts to really bounce up and they get more confirmation of the possible bounce, 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 and they think it's going to go up from here, they might decide to sell one. Maybe it is a 185 or a 190. Why? Because they still want to take advantage of that higher implied volatility, right? You're just getting more juice out of that contract than maybe you normally would because you're above that 50% level over the last 3 days. You're going to get that. If you wanted to really, adjust this though, go to the scan tab and go to, put that at 75 or 80. Then it's really trading at the upper range. Just be mindful that that's not a reason by itself to sell. Be mindful of the position of the market, the stock technically and fundamentally, just bring in everything else we talked about in this class. But folks, if you like today's presentation, smash that like button. I don't think there was a survey in the chat. Be sure to follow Kevin on his X channel, X handle, Kevin Horner CS. I'm Mike Fairborn CS, folks. It was great being with you today. Be sure to subscribe to our Trader Talks channel as well. Love to have you on board. We have 201,000 subscribers. Love to have you if you're not already there, but it's been good being with you. Hopefully we did share, some of these tools that can be useful for you guys as you do look at options. Of course, we can go into further details on that. Just let us know. We can always expand and look for topic requests as well. But on that, have a great day, everybody. See you next time.